Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPUSD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the Forex chart of DXY, and as we all know that DXY showed a massive green candle yesterday, and the reason was ADP non-farm employment change, and the numbers were much better than expected. But today is a big day for non-farm payroll, so my dear friends, please be careful during the event or news. Beginners, new traders, traders with low capital who are in a tight spot, please try to avoid any US dollar position during the event. Observe the market, gain some experience, but try to avoid any position during the event. Okay. So as we all can see, the DXY is right now standing at 105.06. This is the current market price of DXY, and after this massive fall, DXY was in a range for quite some time, and yesterday we could see that DXY tried its best to break the range. We have been talking about the range of DXY for the last couple of days, that we have 105 to 105.30 as the resistance and 103.50 as the support for DXY, and we can see that DXY is just standing at the resistance only. Apart from the range here, we also have the 200 moving average as the dynamic resistance for the market. So the news will be very important for DXY, because if market is not happy with the news, then we will see DXY back to the range again. If DXY is back to the range, then 103.50 will be the only good support for DXY. And we have some minor support around 103.80, but the good support or reliable support is only 103.50, and in case DXY breaks 103.50, then there will be a disaster for DXY, because we do not have any proper support below this. And if DXY breaks 105.30 and starts going higher, then maybe we will see a good amount of recovery on the chart of DXY. The immediate resistance will be around 105.70, but in the long run, we may see a trend reversal. We may see a trend reversal on the chart of DXY. Let's see how the market performs during the news. This is the Forex chart of GBP USD. In my previous videos, I have talked about the support around 1.1900 to 1.1860. As expected, market took support, and we can see that market is showing a little bit of bounce also. So if you're holding a buy position, then you can be on the trade, no need to exit. But if you're looking for fresh position on the chart of GBPUSD particularly, then I'll say that you should wait for the market. Okay, you should wait for the market either break this level or market to hit this level here. Because if market breaks 1.1860, if market breaks 1.1860 level, then you'll get a good selling opportunity and you can take a sell position here. Okay. And on the other hand, if the recovery continues in the market, try to avoid entering in the middle of the chart and just wait for the market to hit the trend line at the top. It will be around 1.2000, 1.2020, 1.2030, around this level here. Why we are considering this level as resistance? Because you can see that overall the trajectory is towards the downside. Market is unable to cross the previous highs, which is a very big thing. It signifies that slowly sellers are entering in the market, slowly buyers are losing their potential, losing their strength. So as a result, if market goes up also, there is a possibility that market may reverse from here. So if you see market reversing from 1.2000 level or 1.2020 level, you can take a sell position, but observe the market first. For example, if you see market forming a big green candle here, do you think that you should go for a sell position? Obviously no. This is the main difference between a trader and a gambler. A trader only trades when the opportunity is right. So if you see market reversing, go for a sell position. If market breaks it, you can just avoid. No need to trade on GBPUSD, because You do not need to trade on each and every move of the market. On the other hand, if market breaks 1.1860, you can go for a sell position again. But before news, okay, before news, if you see market breaking 1.1860, observe the size of the candle, because for a proper breakout or breakdown, volume plays a very big role. Okay, for a proper breakout or breakdown, volume plays a very big role. If there is no volume in the market, then usually it go for a false breakout. So to save yourself from false breakout, you should observe the volume. Volume means the size of the candle. Okay, in simple words, if you see the market is going down with a big red candle, it means that it has volume. You can go for a sell. But if you see that market is going down, but the size of the candles are not convincing enough, it means that market does not have volume. In that case, you can wait for the market for retracement. Once market retrace around this level again and go down, you can go for a sell. Retracement levels are safer. Okay, retracement rates are safer in comparison of breakout rates, because false breakout are a bitter reality of the market. We all know it very well. So observe the market first. If you see market breaking the level with big red candle, go for a sell. If you see the size of the candles are not good enough, market does not have volume, okay, then wait for some time, wait for 3 hours hours and just see whether what the market is doing. If you see that no, the breakout is real or breakdown is real, then only go for a sell position. Observe the market mostly. Okay, so whatever, do follow proper risk management. No trader is 100% accurate, so as a result, do not gamble with your hard-earned money. Okay. Any position may go wrong, so please be ready, because the main difference between a professional trader and a retail trader is that a professional trader calculates the risk before the trade. Keep in mind. So bye bye, take care, see you tomorrow.